Hello, everybody. Welcome to Trading the Close. My name is Drew Dosick, and the stocks today, folks, just lifted up. They lifted up because this is a holiday week. We had light volume in the markets. And plus, from a couple shows ago, I mentioned that the rate cuts are still in play for December. That is boosting investor confidence, at least for now, while we have lighter volume. So let's check out where the markets ended up today, guys. So here we Sorry about that. There we go. Okay. See the Dow Jones up 0.66%. NASDAQ is up 0.82%. S&P 500 now getting above that red candle we had talked about, pushed up 0.74%. U.S. oil up 0.74%. Gold also up today, up 0.78%. And Bitcoin is getting some traction, folks, starting to get its shoes on and start running up the charts. I'll show you what I'm talking about when we look at that chart just here in a few moments. First up, the S&P 500 heat map. We see here with the green day, folks, we got a lot of green on the screen. Now, this one red that we see down here with Google, that's quite all right with Google. As we know, they have just been breaching all-time highs the last two trading days. Makes sense for it to cool off at least for a day or two after all of that moving up. But the rest of the board, guys, was a lot of green. Oracle up over 4%, now finally starting to bounce up too. Netflix up 1.67%, Microsoft 1.78%, AVGO up 3.26%, AMD also almost up 4% on the day. Big move back into positive territory there for AMD. Tesla also up. Walmart up nearly 2%. A lot of green on the screen. Some reds here and there, but really nothing serious to really talk about nor write home about. So next up, let's look at the spiders on the S&P 500. See where this takes us. Now, folks, we've been talking about this for a while. This is truly amazing market, guys. This is a truly resilient market. When you look at these big red candles on the chart, both of which are implying we're going to be going down. Both of them had volume too, implying that there was at least institutional participation pushing price down. But man, we have rocketed right back up. Not only have we gotten above this green candle, we got above and gapped over this trend line. Now, folks, you may or may not know about the river theory. If you don't, take the Winning Trader series, Gareth Soloway's course. It's on sale right now. All of our educational courses are on sale. Invest in yourself, learn these patterns so you can anticipate what's going to happen and react accordingly. As we see here, we gapped up over that trend line today. And I'll zoom in a little closer. We didn't get to the top of the parallel, but we gapped up and ran up. We had a nice push up on the markets today, right through a lot of this chop. Now, next resistance isn't far away. It's right up here on the top of this parallel at $683.11, which also is going to be very close to a gap fill here, $683.38. Both of which should prove tough to get through, unless, of course, we gap up above it on Friday. I don't anticipate that. Friday being a shortened trading day here in the markets, we likely will have also light volume and sideways price action, unless there's anything that develops geopolitically or any other news event that comes about over the next couple of days. So be watching that resistance level on Friday to see if we can't breach it coming through the end of the week into Monday. All right, next up, the Qs. Qs also got above this red candle. Now, today, they just barely closed above it, right? So we'll see tomorrow. Do we get another move up, or pardon me, on Friday, push us up a little bit higher? If so, we're going to be talking about resistance up here around $625. Yes, we'll push through a gap fill at 621, but then 625, the top end of this range, will be the next level to beat for the Qs. Support will be right down here on this inclining trend line, right at $598.17. Next up, SMH. SMH wasn't as strong as the spiders nor the Qs today, as we didn't get above this big red selling candle. Now, yes, we've had some good pushes in tech, but obviously in the semi space, we haven't had as much as acceleration. We'll see if that changes pace next week. But guys, I do want to forewarn you, usually this week being a holiday week, as I've already highlighted, lighter volume, pushing prices up. The first 2 weeks of December can be volatile. That's when institutions are finalizing their trades, getting themselves squared away to wrap up their books for the end of the year. We could see a lot of jockeying come about, so just be prepared. We're running into resistance. Be prepared for some volatility in the coming weeks once the institutions come back and play. Next up, the IWM. Guys, we've been talking about this too. What a rally on the IWM. 4 straight days now, almost straight up on the chart, gaining back nearly 14 days of trading before it. Impressive move. Lower rates are fueling investor sentiment in the IWM, small cap stocks, helping push up these prices. Great run, but it's about to hit some serious resistance right here at $250.05. Now, if we get through that, then we're talking about brand new highs here for the IWM. We'll see if that occurs in the coming weeks. As I said, though, with a sharp move up coming into an expected volatile portion of the year, we likely were either going to chop sideways or have a decent pullback back here into support right under $245. Next up, we've got Bitcoin. Now, guys, I got a couple things to show you about this. Yes, we highlighted the beautiful bounce right here near the support of $80,500, pushed up, moved sideways, kind of been drifting up here. But let me show you this on the hourly chart. I was noticing this the other night, and I was like, oh my gosh, I think Bitcoin is about to start ripping, at least for the near term, because there's a lot of resistance with this big sell-off. But notice what happened here. We had price action. Actually, I'll take it back a couple steps. All the way back here, and you can follow this too on your own. If you know what bull flags are, gosh, learn what they are. We teach them again in our educational courses, but these are very easy to recognize, and they're very easy to understand too what likely is going to happen next. And I'll walk you through that right here on this chart. We had a nice move down. Then we had on the hourly chart a big move up. And what is this? Sideways consolidation. That's a bull flag, implying we're going higher. Now here we didn't get that. This part, there was a lot of sellers potentially bringing the price of Bitcoin lower, but the support held, and we went up and made another bull flag. And I noticed that the price action wasn't violating the low end over here. So all of that was still bullish consolidation. Even though it was jockeying back and forth, that all was implying we were going to go up higher. Plus, remember what I said about the US oil chart with these wicks developing on the bottom of price action, also implying investors are defending that space and buying that product up, whether it's Bitcoin, oil, stocks, whatever that develops on the chart, that's giving you insight. Price is likely going to move higher. Plus, that happened during a bull flag. Well, yes, we're moving higher. So where does that take us in Bitcoin? That should take us to the next resistance level at the 50% area of the parallel. Not much higher, $91,810. We'll see if the weekend, if we can float up through this. And if so, 95,000 is the next level, but then a serious level of resistance right here at $100,000. That one will be the major level for Bitcoin to attack, to get through, should it get through these previous two levels of resistance I mentioned. Next up, gold. Now, gold here didn't really do too much today. Yes, it had a nice up day, still remaining in the lower 50% area of this parallel. So not much new to report. Resistance right above today's highs, $4,177. Support in this parallel will be down here, $4,069. Next up, silver. Man, awesome day for silver. Bulls rejoice. We've separated from this trend line, allowing us to retest these recent pivot highs. Next resistance will be at these pivot highs, near-term triple top, right at $54.25. Should we beat that? We're going to the 50% area of the parallel, basically just above $56. Next up, U.S. oil also remaining here on the charts, guys. This wick today, not as big as the previous three, but price action is not falling and crashing on the charts. Yes, we're starting to form a little bit of a bear flag, getting mixed signals now on this chart. The longer it hangs out down here, probabilities start shifting for a move lower. But at this current state with these wicks, with only 4 candles, still telling me it's about a 50-50 shot. A little bit more probable that we actually start moving up just because of these wicks. The distance that we'll move up to is right here at $61 on the chart of U.S. oil before the next resistance. Nat gas, gosh, guys, I've been calling this too. We were playing pinball on Nat gas. Now, the area to beat to the downside is right here, $4.33. Should we break that? We're coming to $4.02. As long as we chop around right here and say extend this out, that could then be construed as some bullish consolidation, allowing for this March 2025 high pivot to be tagged at $4.92. If you're bull on that gas, you want to see price remain in this range and between 470 and 433, as that will build momentum for potential move higher. Next up, couple stocks that had earnings. So we had Workday reported earnings yesterday after hours. They did beat on both earnings per share as well as revenue, and they did forecast 15% growth on guidance. However, investors did not like that one bit. They were expecting more and plunged the price down. Look at this long-term inclining trend line that worked like a charm today, connected down here from the November lows of 2022 over here to the low pivot that occurred back in August of this year. And look how price action today, let me zoom in a little bit closer. Price action today, as you see here, opened here, plunged through this line, then fought all day to get right back up here above the trend line, saving price action on this chart for the meantime. So if this momentum continues from today's lows, next major resistance is at 233.22, minor resistance just under $224 where all this consolidation took place. So that's the areas you want to watch if you're a bull for accelerated movement upwards. Should this momentum falter of saving the chart, next support down here sub $200 on the chart of workday. Next up, Zscaler, ZS, and you see here on the daily time frame, they did report earnings. They did double beat on earnings per share as well as revenue, but they missed on billings, which is the forward-looking metric used for their subscription growth. Even though guidance was good, stock still plunged down 13.03% today, closing the day at $251.97, just above a major level of support right here at $250.89. This is a major fib level retrace from this move up higher on the chart. That should be a major level to provide a near-term bounce, potentially as high as 272.65. It's going to have to fight to get through this middle area of the parallel to do so, but that's certainly in the cards considering a nice sharp decline today. Should this area break, the next area of support is going to be 20 points lower, folks, down here at 230.56. So gauge that out carefully. You can see here on the RSI, we are oversold near term, so we should be getting a bounce. But you can always plan. And if you're safe and you plan ahead, space out your ads. That way you can protect yourself and your profits if price does eventually plunge down here to this 230 level. Next up, we've got Dell. Dell did report earnings also after the bell yesterday. See here, they got a mixed bag. We've got a beat on earnings per share, and then we have a miss on revenue. Now Dell increased their guidance for Q4 and highlighted a robust backlog, especially with their deals with NVIDIA. But still, the reason Dell didn't push up, say, all the way back to this parallel was because investors were looking for more. Their PC revenue was not up to par. So investors did accelerate price, but not as much as what one would anticipate, especially when a company talks about backlog and includes NVIDIA. The stock price usually is going to start ripping, but it didn't do it today. That could be delayed, though. Notice we've got major resistance right here at $145.09, just on the underside of this inclining parallel channel. That area will be stiff resistance for anybody that does know. Check this out. We've got a beautiful M-shaped pattern here. A move up would create the A, and the rejection right there would then send price on Dell further lower. So we've got to be watching this area, 145.09, if Dell gets up in there, as this pattern is not looking the best at the moment. So one is outside the parallel, two, this MA pattern, both of which posing some potential more downside risk on the chart of Dell. Next up, Hood. And lastly, Hood. What a pop on Hood today, up 10.93%, breaking out of this declining parallel. Another river theory, folks. So again, if you don't know it, you need to start learning, understanding why this price gapped higher and didn't sell off. It gapped and ran up higher on the charts. Next week, I'm going to be watching very closely this 133 and 134 levels on this inclining parallel channel. You can see it contained price for most of 2025. That area should be stiff resistance for price to get back into the parallel, unless, of course, we do another one of these gap and goes, and then that could open the door for more upside in Hood to more new all-time highs. Given that this stock is one of the best performers in the S&P 500, I anticipate potential more profit taking could occur in the next couple of weeks as a lot of these institutions do close out their books for 2025. All right, guys, thank you so much for viewing and tuning in to Trading the Close today. Don't forget to like and subscribe to the video. Send it out to your friends and family for those interested in learning about technical analysis. Aside from that, have a safe and a happy Thanksgiving tomorrow. Markets are closed. We'll be back here with Trading the Close on Monday of next week. Have a fantastic time, folks, and I'll see you then. Take care.